morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. In some key cabinet decisions, the government has liberalized FDI in coal mining and related infrastructure, single-brand retail, and digital media. The government has also given a nod to sugar export subsidy in order to liquidate surplus domestic stock and clear sugarcane areas to farmers. The move will cost the exchequer 6,268 crore rupees. As part of its periodic changes of the Nifty 50 index, Nestle will become part of the benchmark index from the 27th of September. Indiabulls Housing Finance will be the one excluded. British Prime Minister Boris Johnson has been granted permission by the Queen to prorogue the House of Commons from the 12th of September, 5 weeks ahead of the scheduled Brexit date. And Asian stocks are off to a muted start as investors await the next steps in the US-China trade negotiations. Let's talk about the US markets now. They closed near session highs yesterday as investors awaited new developments in the increasingly unpredictable China-US trade war. 10-year Treasury yields held steady after hitting a 3-year low, while the dollar edged higher. Pranita Young of Bloomberg News gets you the highlights in this report.
U.S. markets ended higher on Wednesday with the S&P 500 climbing as a rally in energy shares and in WTI crude oil actually sent energy shares higher. That was one of the best performers in the S&P 500 on Wednesday. Also, investors are still awaiting more information in this ever confusing trade standoff between the United States and China. Now, we did see WTI crude oil, of course, gain to more than $54 a barrel, and the Bloomberg dollar spot index hovered around unchanged during the session, but gold was also little changed, a little bit lower, yet still above that key $1,500 an ounce level. Now, meanwhile, corporate earnings are still in motion, with Hewlett-Packard Enterprise up more than 3% after it's projecting that its profit topped analyst estimates on improved margins. Also, we saw Coty see a relief rally with more than 5% higher, and Tiffany was higher after its second quarter earnings per share beat analyst estimates. However, Movado dropped more than 3% after cutting its full year forecast for earnings per share. Now, there are more earnings coming out with Box Inc. and Elastic, as well as Semtech. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a look at the Asian markets, some of them coming on stream right now. Stephen Engel of Bloomberg News joining me live from the Hong Kong studios. Good morning, Stephen. Just a little while back, we were looking at cuts across the board, but there were only a few markets open, more coming on stream. What's the trend looking like?
Yeah, the trend seems to be with a downward bias on most of the stocks, with the MSCI Asia Pacific Index now trading down by about 0.4%. Only New Zealand is inching slightly higher. The rest of the markets, with the exception as well, China's just turned negative as well. They're all pretty much downward, but not a lot. It's fairly muted trade right now with modest losses in Tokyo, Seoul, and Sydney. We just heard about the U.S. market. You know, energy shares had helped the S&P 500 close higher. But again, volume was really low, and it was below average. And investors here in Asia, of course, also watching the China-U.S. trade developments after President Trump's recent pronouncements on trade. There's a lot of, uncertainty. And Treasury Secretary Steve Mnuchin, he says Chinese negotiators will be visiting Washington. But again, there's no timeline. And that is giving investors a lot of uncertainty, because that previously planned September meeting, we're not sure if that's what he's talking about. Now, in Japan, we're looking at the market there. The Nikkei 225 lower by about 0.5%. The Topix also, we're seeing a dip in service sector companies. Recruit Holdings, the biggest mover there, slumping the most since February of last year. Recruit down 7.5% right now after announcing a secondary share sale. But like in the U.S., trading volume on the Topix, it's 13% lower than its 30-day intraday average. The Nikkei 225 average there, 17% lower. So investors really on the sidelines right now, awaiting new developments in the U.S.-China trade spat. And early indicators for August show that China's economy, by the way, let me throw this in, has slowed further this month on the trade war, of course, worsening global trade outlook and weak domestic conditions. Not a lot of, stimulus just right now for investors to get excited in the Asia markets. Back to you.
Thanks so much for that, Stephen. Let's take you through some updates from Europe as well, and particularly from the United Kingdom. UK Prime Minister Boris Johnson asked Queen Elizabeth II to suspend the Parliament from mid-September to mid-October, a move that could hamper lawmakers' efforts to block a no-deal Brexit and even trigger a constitutional crisis. The request was granted by the Queen. Bloomberg's Jody Schneider tells us why the critics are unhappy with this move in this update from Hong Kong.
Well, basically, it will give Parliament only 2 weeks before that deadline to come up with a plan or to leave without it. Parliament will be back on the 3rd of September, and then, according to this plan that Mr. Johnson has come up with, they will leave on the 12th of September and won't be back for another month, 2 weeks before the deadline. So really what is going to happen now is it will be Mr. Johnson's plan or a no-deal Brexit is what it's looking like. The opposition to Mr. Johnson and to the no-deal Brexit, the problem with that is that everybody wants something different. There's enough of probably a coalition to try to stop a no-deal Brexit, but because they want different things, coming up with a plan in a short period of time would be difficult. For instance, the opposition Labour Party would like to see a second referendum. Others want different parts of the plan. They don't want a second referendum. So it may be Mr. Johnson's plan or the highway, no deal Brexit, which of course the business community opposes because of the potential fallout for the British economy.
Well, Jody, another key player in all of this is going to be John Bercow. He's the Speaker of the House of Commons, so he doesn't think very much of Johnson's plan. What could he do to put a stop to it?
Well, he is the parliamentarian, and he could, when they come back September 3rd, try to, by parliamentary maneuvers, outmaneuver Mr. Johnson and try to do something to stop his plan to suspend Parliament. But it would be difficult. He does not think much of the plan. You're right, Paul. He said it's a constitutional outrage and said that basically Mr. Johnson is playing fast and loose with British parliamentary rules for his own ends. So we'll see how this plays out, but Mr. Bercow certainly will be a key figure in whatever happens in the next few weeks.
All right, before we turn back to India, let's quickly have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with Argentina. The country is again banking on the IMF to stave off default. The fund is in Buenos Aires to decide on a new package of more than $5 billion, adding to a record bailout last year. Now, Argentina's Forex reserves plummeted more than $10 billion in the past month as policymakers tried to shore up the peso after that stunning political defeat for the market-friendly government. To the latest on Brexit now, the Brexit drama has turned another page with Prime Minister Boris Johnson securing the Queen's permission to suspend Parliament ahead of the split. He will shut down the Commons on September 12th for a month, and that will severely restrict opponents of a no-deal Brexit from being able to debate an alternative. Johnson says a hard Brexit would be manageable, but critics say it would mean a severe hit to the UK economy.
Well, it's profoundly undemocratic. At a time of national crisis, Parliament must be able to meet, to hold the government to account, to represent our constituents, the electorate, up and down the country. And it is profoundly undemocratic to shut Parliament down, to stop it doing its job at a time of national crisis like this.
Italian Prime Minister Giuseppe Conte, meanwhile, has been given a mandate to form a new government after days of stop-and-start talks between the Democratic Party and the Five Star Movement. Conte's earlier coalition collapsed when the Anti-Immigrant League withdrew its support. Now, markets welcome the news, but the Democrats remain unhappy at plans to reinstall Luigi Di Maio as deputy premier. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to India now. Agam Vakil is joining me to tell you all about the trade setup for the day and also what's happening in the futures and options space. Lots of headlines last evening, and we'll get into all of those. But how is trade looking at the start?
Well, for now, Alex, trade is not looking that great, but we have to remember that we have seen a lot of strength of late. And as far as the SGX Nifty is concerned, considering all the volatility and the global news, we are looking at a downtick for now. So possibility that we very well could see a negative opening. As far as yesterday's day of trade is concerned, we did see 0.5% cut for the benchmark indices, along with weakness in the broader markets, including the banking indices, where we did see a lot of weakness in the private sector banks specifically, which came off. As far as your ADRs are concerned, for now, looking at volatility with Vedanta, Tata Motors, ICICI Bank, all looking at declines of anywhere between 2 to 3%. And in terms of some others, we just have Infosys, which is marginally in the green for now. There very well could be some volatility in store here on. But as far as fund flows are concerned, FIs continue to remain net sellers, and this time to the tune of around 935 crores. And DIIs, one for a change, did not buy to the tune of that quantity with which the net selling came through from the FIIs. We did see a weak day of trade. We did see Reliance Industries, ICICI Bank, Kotak Mahindra Bank, HDFC Bank bear down on not just the Nifty, but as you can see also the Nifty banking index. But moving on, it is expiry. This one of the longer expiries that we had as far as August is concerned, and what we have seen is unwinding coming along. Of course, this is the August series, but in the September overall, we have seen like a lot of unwinding coming through. As far as the Nifty banking futures are concerned, again, that's where we did see a little bit of unwinding coming along. So we are going to keep an eye on that one. And of course, this is as far as your levels are concerned for your indices for now. And we have seen a lot of writing around the 11,100, 11,200 calls, and that should give you an idea about where we are looking at expiry, exactly where we are right now based on the kind of open interest that we have seen. Let's move on and talk about the other factors here. India VIX rises by around 5%, so keep an eye on that one as well. Among the other variables that we are tracking is, of course, the movement as far as some of your stocks go, and of course, we are looking at a lot of surge in open interest, surprisingly, considering today's expiry in August futures. NTPC, Coal India and TCS. Coal India will be in focus because of the FDI rules, and in terms of stocks which are seeing unwinding, that should also be substantial. Ramco Cement, Biocon and L&T Housing Finance, among others, where we can keep an eye on. But all in all, expecting a mixed day of trade today, Alex.
Thanks so much for that, Agam. All right, now the Nifty 50 is being rejigged, as is the norm. This time, though, there's only one change. To take you through this change and also to talk about the implications, I'm joined by Darshan Mehta. Morning, Darshan. Only one change. I think before this happened, we were talking about a couple of exits potentially, but now we know.
Yeah, so I think the broad market sense was that Nestle probably will come in, and that's why you saw the rally. The difference between going out was probably a tie-up between Indiabulls Housing Finance as well as the entertainment. So this time it's Indiabulls Housing Finance. So that's the big change that happened in trade. The other part is that current weightage is Indiabulls Housing Finance is 0.34%. Nestle will come in much higher, which means that some of the other companies' weightages might drop a little bit. That's the view that you're looking at. As far as the flows are concerned now, because of Nestle coming in, Edelweiss believes $112 million of flows will come in. Motilal believes $95 million. So just take close to $100 million, and close to $40 million outflow is something that we probably will see in Indiabulls Housing Finance, and most of it probably may have been factored in because we've seen a lot of selling that's come in into Indiabulls Housing Finance. The other factors that we need to watch out for, Nestle returns to the Nifty after 16 years. So it was there in 1996, then in 2003 it was excluded. It's come in. So that's the Nestle view. And now it becomes the 6th company in the consumer space to be part of the Nifty. So the likes of Asian Paints, Britannia, HUL, ITC and Titan are part of it. ITC has the biggest weight. Out of a 13% weight on the Nifty, almost 6% comes in just from ITC itself. So that's the traction. It won't move the needle so much for the Nifty financial, because a financial name is coming which has gone out, which is already a high weight on the sector, and a consumer name comes in. The Nifty next 50 are the next 50 most important companies after the Nifty. So the inclusion include Berger Paints, post the stellar set of performance, Power Finance and PNB. India Bulls moves from the Nifty to the Nifty next. And the companies that are excluded from this include ABB because of the demerger that is happening. BHEL, MRF and SAIL are the other companies that actually go out.
All right, thanks so much for that, Darshan. Now, there were a number of announcements made by the government yesterday evening, particularly relating to foreign direct investment norms, but also an export subsidy for sugar. Here's what Railway and Commerce Minister Piyush Goyal said. Listen in.
%% FDI ऑटोमेटिक रूप में कोल माइनिंग और उसके सेल के लिए पूरी जो एक्टिविटीज लगती हैं, जो भी एसोसिएटेड इंफ्रास्ट्रक्चर लगता है, उस सभी कामों के लिए 100% एफडीआई कोल माइनिंग में अलाउ किया जाए। और जो एसोसिएटेड इंफ्रास्ट्रक्चर है प्रोसेसिंग का, जिसमें कोल वॉशिंग है, क्रशिंग है, कोल हैंडलिंग है, सेपरेशन है, इन सब एक्टिविटीज में भी 100% एफडीआई ऑटोमेटिक रूप से अलाउ किया जाएगा। आज विश्व भर में जो ग्लोबल वैल्यू चेन्स है, उसमें जो काम करने का तरीका है, उसमें कई कंपनियां एक बड़े मैन्युफैक्चरर को जो कॉस्ट इफेक्टिव भी होता है, इकोनॉमीज ऑफ स्केल लाता है, टेक्नोलॉजी अपग्रेड करता है, ऐसे मैन्युफैक्चरर के पास कई कंपनियां कॉन्ट्रैक्ट पे अपने सामान को मैन्युफैक्चर करती हैं। उस प्रकार के बड़े कॉन्ट्रैक्ट मैन्युफैक्चरिंग को अभी तक एफडीआई अलाउड नहीं था। अब छोटा बड़ा कोई भी कॉन्ट्रैक्ट मैन्युफैक्चरर हो, उसमें भी 100% एफडीआई ऑटोमेटिक रूप से अलाउ किया जाएगा। All procurements made from India by the single brand retail trading entity for that single brand shall be counted towards local sourcing, irrespective of whether the goods procured are sold in India or exported. For both, whatever is domestically procured will now be considered for the 30% limit. Our expectation is this will lead to larger capacities and will encourage people to bring in more investment so that they can not only serve Indian market but also the international market. This was an incongruity which is being corrected now. Also, as I said, the incremental sourcing was earlier being considered. Now we are going to consider the total sourcing, including current sourcing, and the sourcing will be for a block of 5 years. So it will not be a year-on-year requirement. In the first 5 years, he will be required to ensure that in the total block of 5 years, there is at least a 30% domestic sourcing for both Indian sale and export. Now, because single brand retail trade is also being allowed to come into India, for that, when people have contract manufacturers, for them to meet their 30% requirement, they will need to have these contract manufacturers which may have 100% FDI also being permitted to be permitted to get 100% FDI and be a part of their value chain. So the composite, you'll have to look at it compositely. Earlier manufacturing was allowed, so they were manufacturing and they were selling. But now international companies locating in India, once they have an agreement with a third party, which is the contract manufacturing agreement, they'll be allowed to get FDI, as well as their sourcing will be considered when the 30% requirement has to be met, their domestic sourcing. For giving ease of operation, we have allowed that companies can start online sale of their product as long as they meet the 30% domestic sourcing criteria also. They can start the online trading initially and the brick and mortar store can follow subsequently. Just like in the print media, 26% FDI is allowed with the government approval. Similarly, in the digital media also, which is dealing with news and current affairs, we will allow 26% FDI with government approval on the lines of print media.
All right, so those were the announcements. I'm joined now by my colleagues who've actually looked through those announcements to tell you all about the implications. Let's start. In fact, I'm joined by Darshan, Agam, Yash and Neeraj. Thanks so much, guys, for doing this. Let's start, Darshan, with the coal sector.
Yeah, so basically what has happened is there is 100% FDI that is approved in merchant coal mining, and if you develop the infrastructure which is leading into this, that also is part of it. So basically there were a couple of notes that came out. Bank of America Merrill Lynch says that this follows the earlier government stance which was there to allow commercial coal mining by the private players. They're saying that the rise in competition from private players could be a long-term risk, and they see limited impact on the fortunes of Coal India because it's the largest one, and almost 80% of the output is from there. So for Bank of America, Merrill Lynch believes that the impact on Coal India will be limited. MK is saying that the initiative is a welcome move, but there is still time away for the private players or FDI to come into commercial mining. They see an overarching presence of Coal India, and there are issues in terms of shortages of rake, time taken for acquisition, and all these are key issues. And because of this, they do not see any kind of a near-term risk to Coal India because of this decision. But Agam, there's something that's come in on single brand retail also. What's the implication?
Yeah, absolutely, Darshan. And some positive news when it comes to relaxation of two things. One is your local sourcing, and the second one is, of course, online platforms. So to start off with the relaxation of the 30% local sourcing norms, firstly, that previous sourcing will be counted in the 30% local sourcing. Secondly, exports can now be factored in lieu of imports as far as your local sourcing is concerned. Moreover, when you consider the measuring of the local sourcing, it will be done over 5 years and not annually anymore, which means that a lot of these single brand retail players can adjust a year prior or perhaps in a year later when it comes to this adjustment and falling into this 30% local sourcing bracket. And finally, of course, perhaps an important one for startups as far as single brands is concerned, that the single brand companies can start online sales before they have brick and mortar sales. So that, of course, is another positive. On the whole, a relaxation of norms for single brand retailers. But we have, Neeraj, what do we have in terms of media, digital media?
Yeah, so, you can argue that it's two ways. The headline says that there is 26% FDI increase in digital media.
Yeah.
Digital media wasn't under the purview in the past. So you can argue that now digital media is in line with print media, but there is a 26% FDI in digital media as well. Now, just a cursory take as to, it's brought in line with print media regulations, just a cursory take at what's happened to media at large, wherein there is this FDI announcements that have come in terms of money that has come into the media space. Well, you could argue that it's not been that thick and fast, and therefore this 26% FDI as well in the 2 or 3 outlets which might have foreign partners or otherwise will not really bring in. Look at that. The FDI flow into Indian media has been patchy at best and very, very erratic. So don't quite know if this really moves the needle too much. Not too much in the listed space any which ways, which will get impacted. A lot of stocks were very active yesterday, so don't quite know if that'll really work out or not. Just keep in mind one quick other thing that happened in terms of FDI is the contract manufacturing thing, and maybe some of the contract manufacturers like Dixon, etc., could get impacted. But beyond what the cabinet has done on FDI, there is also an announcement that has come in on the sugar space with regards to the export subsidy. Yash, tell us how important this is and who will benefit out of this.
So this was the last thing that the sugar industry was asking for, and this had been making the rounds for a couple of weeks now. So what the government has in fact announced is that they would be providing subsidy for the sugar industry to export about 6 million tons of sugar for the ongoing sugar season, which would cost the exchequer around 6,268 crore rupees. Now the sugar subsidy would follow the model of what the fertilizer subsidy does. So more on the direct benefit kind of a route, wherein the entire subsidy would be directly transferred to the sugar farmers' bank accounts on behalf of the sugar mills. Now, this is another step that the government has taken. Earlier in the year, they had hiked the minimum support price on sugar from 29 rupees in the previous season to now 31 rupees, which was a 2 rupee hike. The minimum price for sugarcane as well has been retained, or the FRP for sugarcane too has been retained at 275 rupees per quintal. So these are positive measures that the government has announced. We caught up with Abhinash Verma, who is the Director General of the sugar body, which is ISMA, and he says that they welcome this move as it will not only reduce the excess surplus in the industry, but would also provide additional cash flows to the tune of 18,000 crore rupees, which would be utilized to pay the outstanding cane arrears, as well as provide further liquidity to the industry. Now, in terms of sugar production, well, we are looking at a bumper crop this time around as well, despite of the fact that we've seen a delayed monsoon as well as dry weather conditions at the start of the year, which resulted in lower cane acreages this time around. But still, the production is estimated to be around 33 million tons versus expectation of 26 million tons. As far as the other key announcement is also concerned, they have also announced a minimum buffer stock of 4 million tons, which has been bumped up from 3 million tons last time around, and the export too has gone up from 5 million tons last season to 6 million tons this time around. As far as the export trend is concerned, we saw the government really push the sugar mills to achieve the export target, but they fell short by about 2 million tons, so they sold up around 3 million tons in the export market, with the joker in the pack being Iran, because of the sanctions levied upon it by the United States. That would be something important, but there has been a steady demand that is seen from countries like China as well as some other Southeast Asian countries. We spoke with another management from the sugar industry, and he believes that although 6 million tons seems like a very ambitious target, the industry should be able to at least match what they did last time around, which is 3.5 million tons for the current season as well.
Thanks so much for that, Yash. As well as Darshan, Neeraj and Agam. Clearly, those names in the sugar space are going to be active in trade today, and you need to watch out for them. Somit Sarkar is joining me to tell you the other stocks that are likely to be in action today. Somit, what's on your list?
Good morning, Alex. On the stocks and news, firstly, I have Asilia Solution. The company reported its first quarter earnings. The revenues of the company were higher by nearly 10%. Net profit increased by nearly 21%. EBITDA saw a jump of nearly 12%, while the margins came in ahead at close to 36.5% in the first quarter of financial year 2020. Secondly, Sun Pharma will remain in focus. Now, this is on the back of a business standard report, which is saying that the SEBI inquiry related to Sun Pharma has been cleared, and as SEBI has found no merit in the allegations of fraud which have been put on Sun Pharma. Thirdly, Piramal Enterprise will also remain in focus because the company has deferred the issue of non-convertible debentures worth nearly 3,000 crore rupees to a future date. Now, this could be because of the subdued demand that we have been seeing in the bond market. Also, IFL and L&T Finance will remain in focus because IFL, which is the subsidiary of IFL, will acquire L&T Finance Holdings wealth management business for close to 230 crore rupees. Now, the group has entered into a definitive agreement to acquire 100% stake in L&T Capital Markets, that is the wealth management business of L&T Finance Holding. DHFL would also remain in focus because the company has again defaulted in NCD interest payment worth nearly 23 crore rupees, which was due on August 20th. Also, Lakshmi Vilas Bank will remain in focus because surprisingly Partha Sarthi Mukherjee has resigned from the post of MD and CEO of the bank with effect from August 31st. Wockhardt will also remain in focus because India Rating and Research has downgraded its rating on companies' long-term bank facilities and short-term bank facilities to BB plus and A4 plus from BBB minus and A3, and the rating for the long-term outlook has been revised due to refinancing risk, R&D expenses that the company has, and because of the regulatory overhang. Lastly, Balaji Amines, now that would also remain in focus because the company has completed its registration process in EU for a product called ethylene diamine. Now, this registration will allow the company to sell this product to a large number of customers in the European market.
Thanks so much for that, Somit. Now, a lot of stories that we've already spoken about you'll find on the website, and you'll be able to read at leisure in more detail, but there are also a couple more stories that I want to tell you about. First up, the Directorate General of Civil Aviation yesterday has said that it is monitoring the performance of Pratt & Whitney engines in Airbus A320neo planes, and it will take the harshest action if the need arises. It, however, cautioned against any knee-jerk grounding of these airplanes and said this would have severe consequences. There have been cases of mid-air turnback, in-flight shutdowns or engine vibrations, according to the DGCA, which added that the problem is being contained. As much as 40% of domestic seat capacity in India's aviation industry is currently powered by NEO engines. Now, the Maharashtra Cabinet has approved new guidelines giving the State Housing Authority more powers to redevelop old buildings in South Mumbai. This comes just 2 months after 14 people were killed in a building collapse. That's all you need to know going into trade today, but there's a lot more coming up in just a short while. Do stay tuned. This is Bloomberg Quint.